Are we on the brink of stagflation? Last week delivered economic shifts that could redefine your real estate strategies. Let's break down the most impactful economic events and what they mean for you. Let's start by reviewing mortgage rate trends from last week. At the start of the week, the average 30-year fixed rate mortgage stood at 6.8%. By week's end, it had ended down slightly to 6.71%. Meanwhile, the debt service coverage ratio, or DSCR loans, maintain an interest rate around 7.89%. Next, let's look at the retail sales report released on March 17. On March 17, the U.S. Census Bureau released the retail sales report for February, showing a modest increase of 0.2%, falling short of the 0.6%. That is 66% less. This underperformance suggests consumers are becoming more cautious, potentially signaling a slowdown in economic momentum. March 19, 2025, FOMC meeting summary. Moving on to the FOMC meeting held on March 19, the Federal Open Market Committee, or FOMC, convened on March 19 and opted to maintain the federal funds rate at 4.25 to 4.5%. Notably, the Fed revised its economic projections, lowering GDP growth expectations to 1.7% from the previous 2.1%, and raising inflation forecast to 2.7%. These adjustments reflect growing concerns over potential stagflation, which is a combination of stagnant growth and elevated inflation. Next, let's discuss new trade policy development. President Trump's recent tariff implementations have introduced additional uncertainties. The Fed acknowledges that these trade policies could exert upward pressure on inflation, while dampening economic growth, complicating monetary policy decisions. Finally, let's review how the markets reacted to these developments. Following the FOMC's announcement, major stock indexes experienced gains. The Standard & Poor's 500 rose by 1.1%, and the Dow Jones Industrial Average increased by 0.9%. Investors seemed to interpret the Fed's cautious stance as a signal of measured economic management amid prevailing uncertainties. These weeks have seen mortgage rates inch down, retail sales underperform, the Fed holding rates steady amidst revised economic forecasts, and markets reacting optimistically despite looming trade tensions. And just like that, these are all news. Thanks for watching. If you found this video helpful, don't forget to give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have any questions, you can find my contact information and phone number in the description below. Feel free to reach out. I'm here to help you succeed. See you in the next video. Bye-bye.